Hello friends, how are you doing out there today? I hope you're enjoying trading in the markets and my videos are acting like value adds to your trading regimen. In this video today, I want to discuss a very critical update that I noticed in the market on my trading terminal, and I wish to draw your attention as to whether the US dollar can play the party pooper in your trades, your long-term game plan, and your trading blueprint that you might have. Friends, I'm Vijay Bambwani, a trader with 35 years of experience, 28 of which are as a founder, promoter, and CEO of a limited company that trades for a living. Now, I want to help you understand the markets in depth, and I admit that my videos are for those who are actually a little experienced in the markets and do understand the nuances of the market. Today, when I switched on my trading terminal, I was shocked to see that the USDINR had gained 1.25% in one single trading session, which means that the rupee had depreciated by 1.25% against the US dollar in one single trading session itself. What does it actually mean? Why should you bother? How are you concerned? And what does it actually mean for your portfolio, your investments, and your trades? If you have been watching my weekly market outlook videos, you will realize that I cover bond yields and the US dollar index before I actually cover equities. The reason is that all these markets are actually married together and each one impacts the other. And unless you take a holistic view of all asset classes, you're unlikely to succeed in a single asset class. So just because you're an equities trader, you can't say, I don't want to look at commodity markets, because crude can go up, create inflation, and really put stocks into turmoil. Or if bond markets go haywire, which is the source of all money for other asset classes, you could actually see the bank Nifty go into a tailspin. So all these factors are interlinked, and you cannot say, I'm not interested in looking at X, Y, Z of the market. Now, the long period average, or the LPA of the US dollar and the Indian rupee peg is that on an average, after independence, the Indian currency depreciates between 3.5% to 5% per annum against the dollar, which is why you basically have imported items becoming more expensive year after year. Part of it, of course, is the fact that prices are rising in the overseas market, but the other aspect, and many traders seem to ignore this aspect, is that the landed cost is rising also because the rupee is constantly depreciating against the dollar. Now, does the rupee depreciate against the dollar like clockwork between 3.5% to 5% every year? No, it does not. There are phases when the rupee actually is quiet or even appreciates against the US dollar. Look at what happened through 2010 and the beginning of 2011. Now, what really happens is, in a phase when the rupee does not depreciate against the dollar, say hypothetical example 1 year or maybe 1.5 years, what really happens in the real world is that in a time or in a phase when the rupee actually starts to depreciate against the dollar, it will depreciate so much so as to achieve that long period average of 3.5% to 5%. So for example, if for 2 years it does not depreciate against the dollar, in the third year it will depreciate anything between say 9.5% to 12% and make up for all the lost time. I can give you empirical evidence. Look at the period between July 2011 and September 2011. Look at the period between May 2013 to August 2013, when the USDINR went from approximately 54 straight to 69. It came down again thereafter, but look at the period between January 2018 to October 2018. It went from 63.5 straight to 74.5. Then again, when the COVID pandemic hit the markets, between February to April 2020, the USDINR went up marginally from 73.5 to 77. That is when the equity markets were falling. And once the equity markets stopped falling and relative calm and basically steadiness and even bullishness started showing up, the USDINR actually fell for more than 9 months in the Indian currency exchanges, on the currency derivative segment on the NSE. But after a period from April 2020 to Feb 2021, in the month of March, the USDINR started stirring up from sleep. This is the second time today, and I'm recording this video on 7th of April 2021. This is the second time within the last couple of weeks I have seen the USDINR leap up by more than 1%, and a quarter. Now this is along empirical evidence that whenever the rupee does not depreciate against the dollar, which it has not, it has actually appreciated from April 2020 to March 2021, it will now try to make up and possibly jump. Will it go to 76? Will it go to 77? Right now, it's a little difficult to take an exact view, but all we can say is that if history is any judge, the USDINR is likely to appreciate. Why should you care? Because since independence, India has always been a net importer. And 2/3 of all our imports are fossil fuels or natural gas and crude oil. And these are what I call multiplier commodities in my weekly market outlook videos. So when crude and natural gas prices go up, everything that is being bought and sold in the Indian consumer markets like food grains, wheats, pulses, milk, eggs, clothing, electronics, everything essential and non-essential will become more expensive. And unfortunately, at this time, for us, unfortunately, A, oil prices are going up, and B, the USDINR is going up. So the inflation is likely to hit us twice as hard. Because oil is going up and the landed price of that imported oil is going to go up even further because the rupee is weakening against the dollar. Now, is it going to go to 76 or 77 tomorrow morning? No, because the currency market trades in 4 decimals, and on a day when the USDINR moves by say more than 15 or 20 paise, that's supposed to be a big movement day. It's just that there are these odd times like today when you have a 1.25% rally in one single day. But on a routine day, 15 paise, 12 paise, 20 paise up or next day down, which means net in a month, the rupee could appreciate 25-30 paise or depreciate 25-30 paise. It takes a long time to achieve these kind of big moves, unlike equities. But when it does, it will unleash inflation. And when you can basically take a look at the chart of the periods that I showed you, for example, May 2013 to August 2013, when the USDINR went from 54 to 69. Then January 2018 to October 2018, when the USDINR went from 63.5 to 74.5. And February 2020 to April 2020, when the USDINR went from 73.5 to 77, you will see that the equities came under pressure. Because the savvy investor, the large investors, especially the institutions and the FIIs, etc., know that higher inflation is not good for equities. So this, my dear friends, is something that you as knowledgeable traders, knowledgeable investors, and I would like to be ahead of the markets rather than lag the markets and react once everybody knows about something. If you've seen my weekly market outlook videos, I have been talking about bond yields, inflation, and the US dollar index for many months now. I was ahead of the curve by many weeks. I would want my viewers to be weeks ahead of the competition, plan for emergencies, get a battle game plan ready, and so that you're ready to pull the trigger whenever required by the market, and the market will only tell us by changing the prices of the indices and the securities. So let's be careful out there, my dear friends. And I post a lot of market related data on my social media accounts. Feel free to connect with me. Let's get conversations going. Let's help each other grow and become better traders out there by interacting with each other. Here are my social media contact coordinates on your screen right now. Feel free to connect with me. And if you like this video, subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up here. Comment section, let's keep communication lines open, good, bad, ugly. Let's hear it from you. Also, if you liked what you saw, share your video with your family and friends and help me reach out to more and more people. I wish you have a very, very profitable day. Vijay Bambwani signing off for now. Thank you for watching my videos. Take care. Bye-bye.